Hi there, welcome to Kneppy Invest and welcome to August 29, 2024. We have about 1 hour and 25 minutes left of trading today. I would probably say today has been the busiest day we have seen so far in August. That's based off the amount of financial results that have been released. So we're seeing a lot of smaller companies release their results, which sort of makes sense because many companies don't have a say when they get to release their results because it's all about the auditor. And if the auditor they have hired to do their auditing have a lot of bigger companies, they leave the smaller companies to last. So there is no relationship between the timing of a company's financial results and whether those results are going to be bad or good. That's except for the quarterly results, which are not audited. Now, I could be mistaken about that, but I'm pretty sure the quarterly results are not audited, but financial results definitely are audited. And it's all about the auditor, whether the auditor has enough time to do the audits for the smaller companies. And that's why you tend to see most of the small companies release their results towards the end of August. I have heard that from two different sources. Now, there is potential that one of those sources got that information from the other source, and maybe there's only one real source, but I have heard that a few times. That's the reason why many of the smaller companies release their results towards the end of the month. Anyway, an interesting day on the markets in terms of we have seen the indices down, not quite down as much as the American indices, which I'm pretty sure, if we have a look, pretty sure the Nasdaq was down by 1%. Yeah, down 1.18%. Nvidia did release their results after closing. Really interesting. Beat guidance, and they raised their guidance for the next quarter or something like that. Yet in aftermarket trading, shares of Nvidia were down. It's really interesting to see that. So there is potential. Here he goes. The Guardian. Nvidia writes, big tech's AI investment to beat Wall Street's sky-high expectations. But then Bloomberg and Nvidia tumbles after disappointing forecast. Yeah. So why Nvidia's stunning quarter still leaves room for doubt. So a lot of differing opinions out there. So Nvidia did really well. Even their guidance looked pretty well. But some other people are thinking, oh, the guidance is a little bit disappointing. So that's probably one of the reasons why the share price is or the aftermarket trading share price is a little bit down for this company, is because maybe a lot of people thought the numbers were going to be a little bit better. Here we go. Stockhead, Nvidia slumps despite crushing forecast. Yeah, it's all over the place. Anyway, I'm in Nvidia for the long term, or until they show me that maybe the momentum behind the business is coming to an end. But this video is not about Nvidia. This is about the ASX and companies on the ASX. And we have seen a myriad of companies release their results today. In fact, not Hyterra. In fact, I've been doing these watch lists, and the last 2 days, all I needed was one watch list. Now, in ComSec, the older watch list style, they also have a beta, watch list beta, and I think you can put like 100, 200 companies in the beta watch list. I prefer the new watch lists. I just like it. ComSec does this a lot. They improve something, and to me, it's not an improvement. It's just more clunky. If you go back to the normal watch list, it's just so solid. I can see everything. It's beautiful. Anyway, so you're only allowed 35 companies in each watch list. Today, I needed 2. So this is the first watch list I have. This also includes some companies that released their results at the end of trading yesterday, which included Macquarie Telecom, Mineral Resources, CTI Logistics, Steadfast, and Alliance Aviation. But so this is the original watch list, and then second watch list is almost full of companies as well. And this does not include companies that have released their results since 10:25 a.m. The last company I remember looking at was Airtasker. Where's Airtasker here? And they released their results about 10:08 a.m. So that's when I went away, and I have not looked at any half-year reports since then. And we have seen quite a few companies release it, including Curvebean, EBR. So no, doesn't care about that one. Tiny Beans, Alexium, which I do own. What else? Field Solutions, Opal, OPYL, if that's how I pronounce it. FAR, Advanced Braking Technology might be interesting. Share price up a little bit. Ashley Services, Hudson Investment, Adherium, Whatso Property, X Reality Group, and Alterity Therapeutics. Okay. So a myriad of companies have released their results today. So let's just have a quick look at how some of these companies have performed. You'll notice just by looking at this, some companies are big, some companies are down big. So let's go to my original watch list. So those companies who released their results last night, mostly they're doing badly, except Steadfast. But Macquarie Telecom down 6%. Mineral Resources down 8.3%. I'm a little bit shocked it's down by that much because I thought a lot of pessimism would have been already priced into Mineral Resources. I'll talk about that in a second. And now we get to companies releasing results today. I really want to talk about a company called Move Logistics, just because of some commentary in their announcement. And you understand why when I talk about that company. Heartland Group, I saw their results, went, oh, I'm not sure the market's going to like that. Down 9.7%. Next ED Group up 54.17%. I looked at those results and then moved on to the next one, which was Red5, down at 10.96%. So you can see a lot of movement in share prices today. Wesfarmers down 3.5%. Matrix Composites and Engineering up 8.2%. I had a look at their results fairly quickly and I went, ooh, these look pretty good. Osco, flat. McPherson's, where is it? McPherson's down 11.4%. AI Media down, up 9.9%. At one point today, share price of that company was down almost 20%. Yeah, the share price has rallied significantly. In fact, you could have bought shares at 38 cents and then sold it at 60 cents, all in the one day. So I might just have a look at the chart for that company. Bega Cheese up 9.4%. Fenix down 10.2%. Share price is moving towards an interesting level for me. What else is here? Bigtincan up 16.7%. Little bit surprised about that, but maybe it's moving towards turnaround or inflection point or something like that. I don't know. And in second watch lists, we see Qantas flat. Midway, I'm pretty sure they sell wood or something to do with wood. Up 25.8%. Swoop, which I do own, down 22%. Not surprised there. I saw their results and I was a little bit disappointed. So no surprise there. Fortunately, share price that I bought in is still higher or still lower than what the share price is now. But yesterday, share price got up to 25 cents. And I thought, oh, share price of this company is breaking out just before they release results. So I was thinking maybe the market expects really good results. No, the opposite direction for Swoop. Australian Clinical Labs up 11.3%. Not surprised there. Had a look at those results and went, ooh, yeah. Particularly in the second half. In fact, this happened to two companies, Australian Clinical Labs and also Dusk Group. They actually separated the yearly results into two halves, and I have to commend both companies for doing that because they wanted to really highlight that things have really improved in the second half of the year. Demem up 7.7%, Cettire down 16.5%, Dusk, there's Dusk, up 17.4%, Alcidian down 5.4%, not surprised. Australian Ethical Funds up 6.5%, again, not surprised. A little bit surprised Metro Mining is not down as much. I thought their results were a little bit weak. Money Me has dropped a little bit, but the share price has been fluctuating a lot. Adrad, a company I do own, up 11%. I was going to sell, then I've taken my bid out because I thought results were actually a little bit better. I'm going to move on from Sensen. It's another company I own, little company, up 20%, but share price of that company can be quite volatile. Clinuvel, up 10.8%. Very happy with their results as a shareholder. And I think that is it. Okay, so we'll discuss some of these companies, not all of them, because there's way too many, but I have drawn up lists or put a list into TradingView. Here it is, a list of quite a few companies that I might discuss, a brief discussion, and also want to have a look at the chart. Okay, so let's have a look at the ASX today. So small caps down, resources down as well. If we have a look at the sectors and indices, financials up. What's happening there? So obviously maybe CBA, Westpac, NAB, what's the other one? ANZ, or doing it, having an okay day today. I don't know. Energy down big, discretionary down big, staples down big, even materials down 0.8%. Why is discretionary down and staples? Let's have a look. I suppose energy as well. That's down 1.97%. I just like these sector pages because you can see all the companies in it. And if we have a look at energy, the reason that's down is because there's a sea of red here, except for Ampol and Yancoal. But we have seen, or do see some big companies down a fair bit. Karoon down 6.8%, Boss Energy down 7.9%. So obviously the positive vibe in uranium's sort of, fiddling. What word I was going to fiddling? I was going to say fiddling. It's going down. Oh, there's another word I wanted to use. It's deflating. That's a good word. The hype or the interest in uranium is deflating because DPLO also down 6.9%, Santos down 2.5%, and Woodside down 1.2%. So a little bit of weakness in energy today. What about consumer staples? What's happening here? So I know Wesfarmers is down. Is that what's driving this sector down? Woolworths is down as well. Maybe that's gone ex-dividend. I don't know. In fact, Wesfarmers is not even in here. Well, that's interesting. I suppose it's true. Wesfarmers is more of a conglomerate, not really fit into this area. Maybe where would Wesfarmers fit? I don't know. So let's have a look at discretionary. Now, there's Wesfarmers. I'm not sure if it's discretionary, to be honest. Down 2.97%. And I expect the reason this sector is down is because of Wesfarmers. Anyway, let's have a look. I won't talk about the ASX 20. I'll move on to the next topic, which is the best and worst performing companies on the ASX. And this is where we talk about Hyterra. But there's another company that's performed better than Hyterra, MC Mining. I had a look at this one and I just don't know. I don't really understand it. Don't really follow this company all too closely. Up 278.4%, which is a significant rise in share price. So I thought this must have been on the back of some drilling results. No, there'd been a suspension and they signed a subscription agreement with Kinetic. I had a look at it. I went, whatever. And there was some sort of response to ASX price query. Not sure what's going on with this company. So maybe you can explain it to me if you are a shareholder. And I didn't want it to go into too much depth when I started reading their announcement because it was fairly long and it was just very wordy, very verbose. And when I mean that, just have a look at it. And I'm very I wouldn't say lazy, but I have a very low attention span. So when I see something like this, I just move on. I just can't be bothered reading it. And it's 8 pages long. Anyway, but the share price is up 278.4%. So someone likes it. And, hello. Okay. Now, this is really interesting. Share price of this company dropped like a rock. It dropped from 15 cents all the way down to 4 cents over 6 trading days, and now it's just recovered back up to where it was before. So maybe there's no substance in this particular announcement. I have no idea what's happening here. In fact, they did issue a price query. So probably the ASX was wondering why is share price of this company dropping like a rock, and maybe they have explained it in this. So they said no, they haven't had or didn't have any information that could explain it. Or they're blaming liquidity. So no, although given the relative illiquidity of the market for its shares, the company considered it possible that any sale transaction executed on ASX at market, rather than at limit, this is really interesting, may have had a disproportionate impact on the share price. In fact, that's absolutely true. If you sell on market, you're more enthusiastic to sell your shares, and that can actually force the share price down. I see that a lot. And that's why the market tanks it on a bad day, because people just have to sell and they sell on market. And that can lead to a pretty big down day for the ASX because people are just selling on market. I very rarely sell on market. I will mostly sell on limit. Sometimes if the share price is where I want to sell, I just sell on market or buy. So it's interesting that they're sort of blaming the liquidity. But that could be true. All it needs is someone to sell significant amount of shares, a big shareholder to sell, and the share price can just move down significantly. In fact, let's have a look at their trade history. It's going to be interesting. Yeah, so the 11th of, the shares were in suspension for a month. So we had shares traded on the 11th of July. Maybe that's the liquidity. There was no shares traded at all for 1 month. And then someone just went, I can't stand this anymore. I've just got to sell. And then share price went down in consecutive days, 25%. 14.3%, 21%, 23.9%, 16.7%, 17.8%. Share price went from 14 cents to 3.7 cents. And it could be just one seller. And when they started to sell, maybe some stop losses were hit. Maybe other shareholders were freaking out. They saw the share price decreasing. This happens a lot. Share price is decreasing. The company knows something. Something's bad's going to happen. I've got to sell my shares. And now it's up 278.4%, back to where it started. Okay, so this whole announcement today may have nothing to do with what's happened today. So that's an interesting look at possible investing psychology. MC Mining. Didn't know that before. All right. And the other one is Hyterra. Now, I can definitely understand why the share price of this company is up 64.5%, because they made a deal, maybe not a deal, but they have gone into a strategic, maybe not a strategic partnership. They have, or Fortescue has acquired a strategic interest in Hyterra. So just the name Fortescue, simply that name made me realize and think that the share price of this company was going to increase on open. And it's exactly what's happened. It doesn't mean this company is going to be successful with what they're doing. Maybe this is beneficial for Fortescue. I don't know. But again, the market likes it because it's Fortescue. And let's have a look at the chart for Hyterra. So this is a company that does, I'm pretty sure they're a hydrogen and helium exploring company. I remember one of their presentations, they mentioned white hydrogen. So, and the chart does look interesting. Share price has pulled back, or did pull back, and now it did get to an all-time high. I mean, not all-time high, but a long-term high today. So good day for Hyterra. Otherwise, in this, we just have NextEd coming in number 3 at 50%. Other companies releasing results. Midway, I've already talked about that. I'll talk about that company a little bit later again. There's Bigtincan, AI Media, Dusk Group. If we if we do this by market cap, Bega Cheese, Clinuvel, Australian Clinical Labs, all these companies release results. Australian Ethical Investment, EBR Systems release some sort of FDA stuff or thingy today. Let's have a look at that. A very quick look. EBR Systems, what was it? I don't remember seeing it. Submits final PMA module to the US FDA. Doesn't sound that exciting, so I'm not sure what the market is doing there. What else? Titomic up, Somnomed. Anyway. Yeah, so many companies who have released results are in this list. Let's have a look at the worst performing companies today. Intellicare. Ashley Servers released results, but I have not even had a glance at those results. I just remember that company on the list. There's Swoop, Cettire, OPYL, not sure how you pronounce that, also released results. Space Talk. This one was interesting. They did release, I think this was a price query. Yeah, a price query, because the share price yesterday rose 42.3% on pretty big volume on no news. And the ASX went, hey, Space Talk, what's happening here? And I can almost guarantee you, they said, we have not released any information, or we do not have any information that we have not released to the market that could explain this. So the first answer to question 1 will be no, which means question 2 is invalid or not applicable. There we go, it's not applicable. And question 3 is there any other explanation for the rise in share price? A lot of times companies will give some sort of explanation. Space Talk here have said no, flat out no. I would say many shareholders would want to know some sort of, even if the explanation is completely wrong, most shareholders would at least want a little bit of an explanation from the Space Talk. And that explanation could be completely wrong. But I think shareholders just want the company to be a little bit more optimistic on the company. This could be happening why the share price is rising, because the market is pretty stupid and finally the market has seen the light and that's why the share price is rising, that sort of thing. Just answering no, yeah, it just doesn't do it for me. Anyway, that's just me. And most companies actually do answer that, do put a little bit more information, but Space Talk have gone the other direction, and that could be why the share price is down 18.9%. Let's go to the rest of the losers, looking at this by market cap. There were Mid Resources. Webchat did not release results. Webchat had an AGM or something today. Yeah, AGM. So obviously something in their presentation or something, maybe they get a trading update. I don't know, but the market doesn't like it. Although share price is up, was it down? Yeah, 7%. Okay. I'd say the chart for Webjet is not looking that crash hot. Let's have a look. Yeah, it's starting to look a little bit weak right now. I do think this company has the potential to be a high-quality company in the future. Not sure if I'd say it's there yet. It's going to open up the presentation just to see if they have provided any sort of trading update. And most companies should and do provide trading updates at the AGM. In fact, if you do have a look at some companies' commentary for their financial results, they actually mention they will release some guidance when they have the AGM. Usually any sort of guidance would be at the end of towards the end of here it is, trading update. So let's have a look. So obviously, I'd say obviously the share price has dived because the trading update is a little bit weaker than expected, even though they mentioned here, or WebBeds, all markets are performing well. Or they mentioned here, Webjet OTA bookings are down 5%. TTV is down 10% and EBITDA is tracking ahead of the same period last year. So I'd say there's a little bit of disappointment when it comes to the trading update for Webjet. Maybe the market expected a little bit better numbers for the company, for the trading update anyway. Anything else here? Let's have a look-see. We have these energy companies we've already talked about. Kelsian down big again. What's happening with Kelsian? They released a bad announcement the other day, then they released results, and share price is just nosediving. Anything else among the top losers? Silex, no. Or all these companies release results, and a lot of uranium companies on this list. In fact, because they're on this list, I just want to have a look at two things. In fact, I want to have a look at iron ore. No, it hasn't really moved. And the other one is uranium, and spot physical uranium has dropped about 2% today. So that little bit of hype, a little bit of excitement in uranium is deflating. I've remembered the word. Deflating. Oh, Restaurant Brands released results, but I didn't not have a look. Step One released, no, they did not release results, down 8%. I do have a small position in Step One. I am actually thinking of taking a larger position in that company right now. And I have thought about it, and I went, this company is a really sleek, efficient machine who are selling really good quality underwear. Someone did mention this company doesn't have a moat. It does a moat. It's their underwear. It is the moat. Their moat is the underwear. It's a high quality underwear. Yeah, and you can just see that in the numbers. They might have gone ex-dividend, so there could be a possibility I don't really need to discuss. Step One. 26th. No, that's 3 days ago. So I don't know. Let's have a little chart for Step One. It's not concerning at all. This is actually possibly a good buy the dip situation for Step One. And what else do we have? That's it. Corp Financials, I think, released results yesterday, and the share price did rally. Anyway, let's get into the results. And I do have a list of companies here that I might want to talk about, but the list is fairly extensive. I'll start with Move Logistics, and I've got to give a bit of credence to this company. Now, this is a really illiquidly traded company. I'm pretty sure they're listed on the New Zealand Stock Exchange as well. I wouldn't even think about buying shares in this company. If you look at the trade history, some shares were sold on the 20th of August and before that on the 16th of August. So definitely illiquidly traded. If you look at the summary, someone wants to buy some shares at 22 cents and someone really wants to sell some shares at 33 cents. So if they need to sell shares, if they just have to, the share price of this company will drop 33% with one trade, 10,000 shares traded. So that person wanting to buy shares at 22 cents really hopes that person who wants to sell shares at 33 cents really has to sell. So sort of like a cat and mouse game between the buyers and sellers. And additionally, there's also a seller at 33.5 cents who wants two sellers at that price. So there's a lot. Yeah, there's a big difference between gap between the buyers and the sellers right now, and that's why nothing's happening. And I just got to give a bit of a credence, bit of an applause to this management of this company, not for the results, but for the commentary. Okay, and this is why. So results are pretty weak. Really weak, but this is what the chair of Move Logistics says, Julia Rao, R-A-U-E, have no idea how to pronounce that. Move's results, This year clearly disappointing, but they're not blaming anyone else but themselves. We acknowledge that we were too slow to react to the recessionary environment, which has been stronger for longer than expected and reduced costs to match activity levels. Then they go on how they're going to improve things moving forward. And I just love it when anyone, a company or anyone, acknowledges their mistakes. They don't blame anyone. They take what's the word? How do you say it? You take ownership of your decisions, your decisions, and that's what this company has done. They've taken ownership of their bad choices, their bad decisions, and they've accepted they were too slow to react to the recessionary environment, and they have suffered. And just for that thing alone, I've decided to mention Move Logistics. Now, I will not buy shares in Move Logistics for various reasons, but yeah, if I saw any management of a company say this sort of thing, I would say they've got the right mindset. I just don't like when management blames everything else except themselves. Oh, we had no control. This happened. This happened. It all affected our results. They've taken ownership. Congratulations, Move Logistics. If they didn't say all that, I probably would have moved on and not even mentioned this company because you can see why. Anyway, let's move on to another company, Australian Clinical Labs. And I'll actually show you Australian Clinical Labs and Dusk, if I remember, just to prove I have really bad memory. There is a chance I will completely forget to show you Dusk next. And then I'll get to Dusk. In fact, it is next, so I'm not going to forget. That's good. I was going to say, probably the best way to remember is either to write a little note or actually take Dusk up to just behind Australian Clinical Labs. And the reason I want to show you these two companies is because they did something very similar. And one of the reasons why the share price of both these companies is up is because of this very reason. Now, the other day, Helios released results and their share price rallied. How much did it rally? 12.93%. We also saw Australian Clinical Labs share price rally. And I thought that's probably on the back of Helios results, up 5%. So not as much as Helios, but share price the other day fell 6.4%. So share price did drop back to almost where it was before that rally in Helios. Anyway, this is not about the share price moving or rising and dropping. This is about, which one? Maybe their presentation, because they did no media release. So if you have a look at this particular table, yeah, it's actually this table. That's all I needed. So they have actual financial year 24, actual financial year 23, which is exactly what they should do. Many companies then would put a percentage change or an actual change or something like that in the third column. But what Australian Clinical Labs have done here is they've separated the financial year 24 into two halves, just to show that the second half was significantly better than the first half. And that's exactly what has happened for this company. So revenue from 337 million to 359 million, underlying EBITDA from 87 million to 103.8 million, underlying EBIT 23.4 million to 39.1 million, underlying profit from 10.3 million to 21.3 million, etc., etc. So without doubt, the second half was much better than the first half. And I would say, without even going through this presentation, they've probably mentioned that a few times. Another thing I just noticed right now, financial year 25 has started strongly with revenue per working day growth of 7.6% in July on 5.9% volume growth. So that could be another reason why the share price is starting to go higher, is because a nice second half of the financial year and financial year 25 has started stronger. Now, I did not show you Move Logistics chart, and there's a reason behind it. It's an ugly chart and it's illiquid. But Australian Clinical Labs, this one is starting to look interesting. Is this a breakout? I think it's starting to look like a breakout. My only concern about this particular chart is a little bit of something we have seen during the day. Share price did get up to about $3.12. And it's understandable why there's been a selling between about $3 and $3.15 is because if you go back to December and January, December last year, January this year, the share price did get up to these levels. So there would be some shareholders who bought at these levels, saw the share price fall, and they said to themselves, as soon as the share price gets back up to where I bought, I'm going to sell. That's resistance. That is what's happened, or what is happening, or part of what is happening. It's not completely. And that is resistance. That's exactly what happens. If you don't believe me, I go out and talk to a lot of investors, and you will see and hear investors say that. Well, I bought into this company, share price has dropped after I bought. So as soon as the share price gets it back up to where I bought, I'm going to sell. I have heard that a few times, so it's not me making things up. I've heard that from 2 different people with who I work for. And I don't know many people who invest at work. These 2 people who I know who do invest said the same thing. And these 2 people don't even know each other, by the way. Anyway, so Australian Clinical Labs, I think this is pretty good. I'm going to put this onto my breakout and buy. There we go. It's already on my breakout. It was looking fairly good. Onto Dusk. This is another company whose share price is looking like it's turning around. So Dusk Group released their results, share price up 20%. Now, if you look, I'm not sure if it's in the announcement presentation. It's probably in the announcement. A lot of times I won't. Oh no, it would. There's no table here. I'm pretty sure what I saw with Dusk was a table, or maybe not. I definitely don't remember this. Definitely don't remember this. Where did I see the table? Because here they've just gone financial year 23 and financial year 24. Maybe I'm thinking of another company because I'm pretty sure there was one company, and I'll get to the trading update soon. There was definitely one company who had exactly the same thing as Australian Clinical Labs, and I thought that was Dusk Group. I could be mistaken because I am mistaking a lot. I make mistakes all the time, and I'm pretty sure it was in a table, which I don't see. So maybe the reason why, because the numbers for Dusk Group were pretty weak. If you compare financial year 23 to financial year 24, seems like everything was down. So sales down 8%, total like sales down 12.1%, gross profit down 7.5%, EBIT of 6.2 million. Last year was 16.5 million. They don't even mention net profit there. Inventory of 15.5 million, but it's just the outlook. So go to presentation here because it looks nicer. The outlook, and this did look really good. So the first 8 weeks of financial year 25, total sales up 16%, like-for-like sales up 12.1%. This seems like a really strong start to financial year 25. So maybe people are starting to buy candles again. I don't know. So a nice trading update from Dusk Group. Did they put any numbers for financial year 25? Not what I see. So there's definitely another company out there. Oh, by the way, let's have a chart before I move forward with that train of thought. So we started to see share price turn around, and it broke out of its downtrend on the 18th of July. That was a good day to buy. So you could have bought that day, the next day at 76 cents. Now it's $1.06. So I am calling this a breakout, but just like Australian Clinical Labs, there has been a little bit of selling today, which is understandable because if you go back through time, share price of this company has dropped a lot over the past about 3 years. Let's go back. Share price reached this high. Gee, when was that? Back in July 2021. So we're talking about 3 years ago. Share price was $4, now it's $1.06. So share price has dropped 75% since then. So there will be still shareholders who bought at high prices who are looking for the opportunity to sell out. Maybe now is not time to be thinking about selling out because definitely the trend and the sentiment in this company is shifting positively, and that's not a time to sell. I'm now really intrigued which company separated their results, which other company separated the results into 2 half years. I thought it was Dusk for some reason. Maybe I just missed it. It was definitely not Cettire. Maybe it was Cettire. I'm trying to think of which other company on my list could have done that. None of the other companies could have done it. Oh, it's gonna be annoying me. I'm gonna look at the presentation again. Maybe I completely skipped it. I don't remember looking at this presentation. Yeah, I don't remember looking at the presentation at all. And it's definitely not in their announcement. It's definitely not in their preliminary funnel report. Maybe it is. Maybe that's the one. Maybe this is what I opened up. Because sometimes it was the first. It was the. They wouldn't have that in here. It was the first announcement I did open because it was the first one released. Anyway, let's move on to the next one. Cettire. What can you say? Cettire has been all over the place the last few months and down 17.8% today. I like the title of their media release, Rapid Profitable Growth. The thing they didn't mention there is the profits are going down. So not really profitable growth. Revenue's growing, but the profits are not. And we can just back that up by looking at their numbers. Anyway, so gross revenue up. Here it is. Here's the table. Nice. They should all put this stuff in tables. Gross revenue up 81%. Sales revenue up 78%. EBITDA up 11%. Adjusted EBITDA margin down 2.6 basis points. So that does look like growth there, but that's EBITDA, which I totally ignore, and it was adjusted EBITDA, so I don't care about that. So let's have a look at the presentation. Maybe this is one of the presentations I did have a look at. I just remember seeing profits down. Maybe this is the one where I opened up the Appendix 4E first. Oh, this is annoying. I definitely didn't open up their rapid profitable growth thingy first. Let's have a look. Oh, yeah, it would have been this. Yeah, it was this. It was this. So revenue up 78%, profit from 15.966 million down to 10.474 million, down 34%. So that's not profitable growth. That's in fact the complete opposite thing. The company's gone backwards in the year. The reasons behind that, there's no one-offs there. So this is all legit. Advertising and marketing expenses have absolutely exploded. They're doubled. So that's a little bit of a concerning thing. Merchant fees. I think one of the reasons why advertising and marketing expenses have doubled is they mentioned somewhere that this space is becoming a lot more competitive. And if it's a lot more competitive, they have to sell things at discounts, or the competitors are, and they probably have to spend a lot more on advertising and marketing. This company has no moat, zero moat. And you can see that just by their expenses. So that's one of the reasons why I'm not a big fan of this company. I have traded in the past. But anyway, and that does affect the profitability of this company. So significant increase in revenue, but profits down. And that's the reason why. I'm going to have a look at the cash flow. Very quick look. So nice cash flow. So that's one thing going. Nice cash flow, but there could be reasons behind that. If you have a look at 27, note 27, this is like the reconciliation between profit and cash flow. And you have to find it here somewhere. Getting very close. There it is. So there's probably a pretty big change in working capital. And yes, so the increase in trade and other receivables actually was not that big. And increase in trade and other payables was significant, 33.5 million compared to an increase in trade and other receivables, which was 2.9 million. So that will have a significant effect on the cash flow. And inventories was down as well. And in fact, if you go to the balance sheet, you'll be able to see that changes in working capital by fairly good. So cash up 32 million, trade and other receivables up 3 million, and trade and other payables up 44 million. So that sort of will be beneficial to the cash flow, because these are things they have to pay, trade and other payables, so they've left that on the cash. They've got that in cash, which they have to pay. So you do have to look at the cash flow statement with a grain of salt, and this is a really good. This really proves it. So if you had a look at this and this alone, you'd say operating cash flow positive, 63 million, increasing from 36.5 million last year. Wow, this company is really performing. So context matters. Changes in working capital do matter. You can manipulate your cash flow statement by changes in working capital. You can manipulate all financial statements to a degree. And the chart for Cettire. Anything interesting here, Cettire? I would say no. No, in fact, I would not be surprised if the share price falls below $1. The probably only interesting thing about this particular chart today was massive sell on open, massive rally after the first minute. You can see share price went from $1.07 all the way back up to $1.26 within 20 minutes. Not sure who was buying. And then share price has fallen since then. So I'm not sure who was buying. That was foolish buying, in my opinion. But someone liked it, the results, and I thought share price at $7 was good buying. Don't know. Interesting trading with Cettire, but those who did buy at, say, $1.25 are now ruining their decisions. Okay, let's go back to, oh, damn it. Cettire. Midway, up 25.7%. I don't have to look at that. This is one of a few results I did not even look at. I just glanced. I just noticed they released results, and now the share price is up 25.8%. Pretty sure this company sells wood stuff. Wood stuff is probably a really broad explanation of what this company does. So let's have a look. He's one of Australia's largest wood fibre processors and exporters. So at least I was right in saying wood stuff. So wood fibre processors and exporters with a strong and growing plantation and carbon management business. Interesting they say carbon management business. Midway's fibre is used in recyclable paper and packaging. This company has really not done anything for me if you have a look at the chart. So obviously something is in these results. So profitable, $2 million. Last year they were unprofitable. So again, no table here. I love tables. Give me a table. Maybe the presentation has a table. So obviously the numbers were better than expected. I'm not sure if many analysts actually do anything with this company. I don't see any tables here. Here's a table. So a few ups and a few downs. So sales revenue up, in fact, up big. Wish they had a percentage change, by the way. This company's also broken down first half into second half, but they did it for both years. EBITDA from 2.9 million to 14.2 million. EBITDA statutory from 6.5 million to 12.3 million. And a lot of the things that are down, like expenses are down. It's not right. Expenses went from 194 million to 263.7 million. That's not down. You've got it's negative. No, the expenses are up. Sorry, other income down. So a lot of the downs are not that significant. Anyway, so seemingly a pretty good year for Midway. Let's have a look at the chart. And this is why I'm not that excited. Midway is just over the long term. In fact, if you look at the weekly chart, oh, well, geez, back in 2019, the share price just collapsed and hasn't recovered. I'm not sure what happened there. I haven't really been following this company at all. And even if you look at the daily chart, this is not a breakout. Share price was at these levels back in May, so not that long ago. Although you could say, almost argue, it's at a 3-month high. Not quite. Share price was at these levels at the start of June, so not quite a 3-month high for Midway. But the market's liked it. Interesting. Inside Cettire's bizarre earnings call. Yeah. Well, that's interesting. Bizarre. I wonder why it's bizarre. Cettire has repeatedly been called out for a lack of transparency or accountability. Can I open this? This is a pay site. Sometimes you do have to pay. So the ASX had been pushed back to provide investors time to digest its full-year results. It was just as well. The original 6:30 a.m. start time came and went, and still no results had been released for anxious shareholders. Okay. When the Zoom call eventually kicked off 2 hours late, so 10:30 a.m., or when the share price started to fall, 10:30 a.m. Okay. So now we have an explanation why Cettire share price dropped a lot, I think. It's when they started their conference call. That's interesting. Thank you, Capital Brief. That, even though I can't read the whole article. Let's move on to the next one. Swoop. I'm going to bypass Swoop. I'll just have a look at the chart. The results were a little bit disappointing, but that's okay. And you can see the share price was trying to break out the last few days. Got to 25 cents, now it's 19.5 cents. So obviously the results disappointed, and I was hoping, actually we'll have a look at the results. I was hoping the company could have been profitable because they were on that trajectory, and no. So nice increase in revenue, 88.9 million, EBITDA 16.4 million, but they were unprofitable and also burning through a fair bit of cash. They mentioned here operating cash flow positive, 10.7 million, but they spent a lot of money, so they were free cash flow negative, and they are burning through a fair bit of cash. So I thought maybe this could have been the inflection point for this company, but I think we have to wait a little bit longer for Swoop, and definitely the market has not liked it. Share price down. 20%. Adrad, this is a company I do own, and I was thinking I'll just sell it when it gets to 78 cents. That was my sell point. And they released results. I had a look at the results and I went, oh, I'm going to get rid of my sell bid. Share price did get to 75.5 cents. I thought these results were okay. So I think the market was expecting the numbers to go backwards. But everything actually did go backwards, the pro forma. But the statutory went up. So pro forma and statutory, so pro forma went down, statutory went up. The profit did anyway, and revenue's gone up as well. So I think the market was expecting worse results than this. Now I have not gone through this with deeply. So there could be something in the outlook. I'm not seeing anything significant in the outlook. Anyway, so I didn't mind their results. So things are still moving in the right direction, in my opinion, and I think the market agreed. And the only negative thing about this company, well, there's a few negative things, is just the chart. So yeah, but a good day today, but it's not breakout. There's me buying at 72 cents. So I actually am in profit right now. But why 78? Because on the big down day, 31st of May, when they released a negative trading update, share price fell to around about 80 cents. And I thought, if the share price gets back up to 80, I will sell. I think that sort of thing. I've made that decision a few days later, maybe a week or 2 weeks later. Anyway, not the best looking chart, but it's okay. Better results than I expected anyway. Adrad, Clinuvel. Okay, this one is a nice surprise. I think the market was expecting very little growth. I don't know if that's true. I wonder if I doubt Capital Reef has mentioned anything. Clinuvel. Ooh, Mineral Resources scraps dividend. Oh, market's not going to like that, and it hasn't. Yeah, I can't see anything with Clinuvel, which is not that weird, but let's have a look at the media release. So I had a very quick look at the numbers and I went, it's not bad. So revenue up 15%, expenses up 19%, but that's okay. Profit up 11%, profit after income tax expense up 16%, cash reserves up 17%, basic earnings per share up 15% to 72 cents, and net tangible assets backing per share up to $4.02, which is an increase of 22%. Dividends flat. I don't care about dividends for this type of company. So we still see growth in this company. And I think the market was expecting no growth. And that's why the share price has rallied a little bit. And I think one of the reasons why the share price hasn't rallied as much is because the share price has been in a downtrend for a while. And for the share price to really rally from here, I think the company has to release a really significant announcement to really force out all the sellers. So you will see quite a few sellers, particularly shareholders who bought at higher prices in the past, who just have to sell out. So to drive all those sellers out, you either need to see the share price go sideways for a long period of time. And the reason you need to see that is it forces those sellers to sell, forces those holders to sell, because they become bored. Share price is going sideways. Just rally, 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 they say. Share price doesn't rally, they sell out. And eventually, after share price has consolidated for a long period of time, all those shareholders have gone, they've left. So there's no resistance. That's why a long period of consolidation can be very healthy. The other thing that can drive all the sellers out is if a company releases a really significant, powerful, positive announcement, and you get a lot of buyers coming in. And a lot of the buyers will bring in all the sellers, particularly if the share price goes on or starts to go on a run. I don't think this is a start for Clinuvel. We have seen in the past, the company has released a positive announcement. So on the 5th of July, share price on that day rose 14.6%. The next day, the share price dropped 10.8%. And that's the resistance. So if you don't have enough buyers, the enthusiasm of the sellers takes control. Share price drops. Good time to buy this company is at $13. That's a nice little double bottom, looks like, potentially. And share price was at $13 not that long ago. And so I think these results were pretty good from Clinuvel. No complaints from a shareholder like me. Australian Ethical Funds. Yes, this is a breakout. There's a downtrend. Started in January. and a bit of selling, which is understandable because, again, just like all these other companies whose share price has dropped today, it's resistance. Good results. Very quick look at Australian Ethical Investments. Not much to say. Nice increase in profit, increase in funds under management. Where is it? Here it is. This is not what I looked at, but profit up from 11.8 million to 18.5 million. There's nothing to complain about when you look at this company's results. And I'm not surprised to see the share price rally. And this could be the end of the downtrend for Australian Ethical Investments. The downtrend has been potentially broken. I just like to wait the next few days because the share price is just above that uptrend. Red5, won't have a look at the results of this company. I did see someone mention the results were a little bit disappointing. So not surprised to see the share price down 11%. And funnily enough, the share price was in a downtrend before these results. We have seen a couple of lower highs and a couple of lower lows. So this was already in a downtrend. So the market was a little bit skeptical about this company going into results. Fenix, this is interesting. So I mentioned maybe a few weeks ago, I would think about buying Fenix when it gets to about 24 cents. I'm still there. If I see this company getting to 24 cents, I will buy it. Their numbers look fine. It looks fine. The only problem with Fenix is the price of iron ore. It has dropped. But I think this company is becoming more diversified. And I'm pretty sure their all-in sustaining costs, or the amount of money they need to get the iron ore out of the ground is actually also lowering. And when you have a look at their full-year results, if iron ore does recover, this company is looking pretty good. So EBITDA of 73.2 million, profit of 33.6 million, up 15%, cash of 77 million. And I'm thinking right now, the market cap of this company is not too stretched. I would say maybe 200 million or 189.16 million. If you take away the cash, this company there's an enterprise value of 112 million for a company that had profit of 33.6 million. So this company is trading on 4 times enterprise value if you just use profit after tax. Actually, not even that, maybe 3.5 times. So there is definitely an argument to say that Fenix is moving towards at least fair value, possibly even good value. So even though the share price has dropped a lot, even though the chart looks pretty ugly right now, I wouldn't be surprised to see share price eventually get to a nice little support level. I'm hoping maybe 24 cents. I will definitely buy some shares in this company if it gets to 24 cents. I'm putting that out there right now. Might even buy before that. Heartland Group. Someone did mention this company. Have a look at Heartland Group. It looks pretty good. Chart started to look good, starting to move into an uptrend, and then they released results today, down 10.2%. I did not have a very close look, or did they release results yesterday? Oh, no, it was early this morning. This is a New Zealand-based company, not companies, and this is the bank. And obviously down 10.2%. The market didn't like it. Now on to mineral resources. Okay. What does mineral resources do? Hands up, anyone who knows. So mineral resources traditionally was a mining services company, and they decided to become a mining company, and they got into iron ore and lithium. They're also an energy explorer, oil, gas explorer, something like that. What's happened to iron ore and lithium over the past year? They've both fallen significantly. Hence, mineral resources performance is going to be significantly worse than last year. In fact, if you have a look at the results, I read them last night, and if you look at the breakdown of their numbers by division, their mining services division did okay. I could be completely wrong. Here is mining services production volume increased 9%. Underlying EBITDA of 550 million, an increase of 14%. So their mining services division actually did fairly well. However, iron ore and lithium did not do so well. That's why everything's down big. I'm a little bit surprised to see such a negative reaction from the market because I was thinking, well, the market should have already known this. But the share price is down a bit, although the share price has had a little bit of rally today, and the share price in a well-defined downtrend, mostly because of lithium. Well, no, mostly because of iron ore. So share price has dropped from $80. Share price has halved. Yes, $80 to now $40.87 since May. 3 months, dropped 50%. I would say this company is getting to the point where value investors will be looking and going, ooh, there could be maybe some value here. And if we do start to see lithium and iron ore go on a bit of a run, mineral resources could be a good play. So that's mineral resources. Wesfarmers, I just have a look at the chart. And actually, no, I'll have a look at the results. I did see someone write, oh, what a great results from this company. I was like, what? Huh? I sort of understand what they're talking about because this is sort of like a discretionary company. And if you have a look at the breakdown of their results by the different divisions or different departments, here it is. This is what I was looking at. I was like, oh, yeah, I mean, then some are up a little bit. So Bunnings up 2.3. This is just revenue. Bunnings revenue up 2.3%, Kmart up 4.4%, Officeworks up 2.3%, Industrial Safety up 1.5%, Wesfarmers Health up 5.9%. A bit of a drop in CEF and Catch. Don't know those much at all, but overall revenue up 1.5% and earnings up 3%. So you might be saying, okay, that's pretty weak. But someone did make the point that in the discretionary space, those numbers are actually not that bad compared to some other companies. So a lot of other retail companies have seen dropping sales and dropping earnings. So on that basis, not bad for Wesfarmers. But Wesfarmers has a P ratio of 35. So you are paying for that. So I actually am not surprised the share price is down 4% because, yeah, I thought you are paying up for Wesfarmers. Now, this is, I don't know if I'd call this I'll call this a high-quality company, but you do pay a premium. And the chart does look good. Even today, the chart still looks good, and though share price has dropped. But its valuation, that's my one concern about Wesfarmers. Are you paying a little bit too much? Because if you do have a look at the history of this company, they don't grow as much as you might think. They also have the lithium play, and if lithium goes bonkers, that could really benefit this company. Next, Ed. Now, so even though the share price has rallied a lot, the chart still looks pretty weak. So it's up to 18 cents. I would say, without even looking at these, I did not have a look at the results. I would say the market was surprised, was shocked. So revenue up 8.9%. EBITDA down 10% from 16.7 million to 15 million. We're operating cash flow of 1.7 million, down from 25.2 million. So some of these numbers look pretty bad, but obviously the market had sort of seen the results and went, oh, better than expected. We thought horrible results. Also, maybe they had some positive updates, positive trading updates, that sort of thing. Won't go into too much depth because when you look at the chart, it's ugly. Even after today, it's still ugly. Some good volume coming in. So there is potential this is the bottom, or maybe 12 cents is the bottom, which we saw a few days ago. In fact, we saw 11 cents or 10 cents is the bottom. So maybe this is the bottom, but I'd like to see what happens the next few days because there will be a lot of shareholders who bought at significantly higher prices who want to get out. Share price not that long ago was $1.80. That was in April last year. So share price of this company has dropped 90% in about 16 months. 90% in 16 months. Bigtincan, it's up 14.17%. I don't know why. It's a low-quality company. Revenue did not grow. Sure, EBITDA is growing, but it's because of cost cutting, that sort of thing. This is I'm not going to say it. I'm not going to be nice to this company. No, if I don't have anything nice to say, I won't say it. So even though the share price is up 14.2%, not interested. I will become interested if I start to see a bit of shift in sentiment. I don't care if I don't like this company. I will trade this company because I could be wrong. Bega Cheese. There was one thing I did like about Bega Cheese, and that was their guidance. So I don't know anything about the results. Here is, they did do a financial year 25 outlook. So if you look at the numbers here, EBIT was up 31%, normalized EBITDA. Statutory EBITDA up 15%. Profit went from big negative number to positive number, so can't really take much of that. Earnings per share at 10, which means the company is trading on a P ratio of 47. But it was their outlook. So the group expects a normalized EBITDA between 190 and 200 million. The normalized EBITDA this particular year was 164 billion. So nice growth, expected this year. In fact, that growth would be 36.48, not about 20%. We'll say about 20%, which would be nice for Bega Cheese. But they probably do have to achieve that sort of growth to justify the current valuation. And the chart does look interesting. Is this is not necessarily a break? Oh, no, it could be. This could be a breakout for Bega Cheese because the share price was showing signs of going sideways, and now it's getting to a long-term high. The other one, the last company I just want to look at is Matrix Composites and Engineering. Now, the chart does not look that interesting. I'll give you that. But I had a quick look at this company. I don't exactly know what they do. I have heard someone talk about it, and what they talked about did sound interesting, but I've completely forgotten what they talked about. Something to do with sea and something. I can't even say. Let's have a look at what they describe, how they describe themselves. Something to do with the ocean. Okay. Specialize in design, engineering, and manufacture of composite advanced materials, technology solutions for the oil and gas, civil and infrastructure, resources, advanced and transportation industries. I'm completely wrong. Completely wrong. Oh, I know what company I'm thinking of. I'll show you the other company I was thinking of. Anyway, revenue up from 47.2 million to 85. So revenue has, I was going to say doubled, but that's horrible mathematics. It's not quite doubled. A doubling would be 94 million. So revenue is up a fair bit. Underlying EBITDA from 0.2 million to 11 million. Profit after tax from, well, it's gone from 8.7 million to 3.6 million. This is where you have one-off. So last year there was a one-off. No, there was a one-off. Reversal of prior asset impairments of 15.8 million. So the company would have been actually loss-making last year by a fair bit. Now it's profitable by 3.6 million. Operating cash inflow of 10.9 million. Last year was an outflow of 9.1 million. So, actually, no. Order backlog for subsea work, which does make me think this is a sea company. They do a lot of work in the sea. Anyway, so maybe that's why I remember this company as a C company because of that little, because I did have a look at this overview. That's probably why. It's all coming back to me now. Anyway, so this company, these results look interesting. The chart, not so much. If you have a look at the weekly chart, this is not a sign of a high quality company. In fact, maybe not anything at all. But if you do have a look at the weekly chart, share price in long-term downtrend, a multi-year downtrend, and possibly you could actually argue this long-term downtrend has come to an end. And we are seeing signs of maybe the share price wanting to move into a longer-term uptrend. Some really good volume coming at the start of 2023. When the share price started to increase, that's a good sign. So that's Matrix, Composites, and Engineering. There is one other company. I did not put it in this list. And this is probably, I was getting confused between Matrix and this one, BWN. No, N. This is a recent listing on the ASX, Bhagwan Marine. Share price down a little bit today. And when I say recent listing, I mean recent. 6 days ago. Their first day on the ASX was the 29th of July. Actually, that's not 6 trading days. No, that's a weekly chart. I was going to say. Listed on the ASX 1 month ago. And since then, share price has gone sideways. So this is a C company. Well, it has to do with a C anyway. Sea services or something like that. The marine's in the name. I have not had a look at this company. I had a very quick look at their about section because I was like, oh, what does this company do? Because I had heard of this company. And when I saw their results, I went, oh, I should have a look at the results. So they do, here we go. A marine services company provides a diverse range of marine solutions in ports, nearshore, offshore, and subsea locations. Oh, subsea. Matrix Composites. To industries including oil and gas, subsea, port, civil construction, renewables, and defense. So maybe this is fairly similar to Matrix Composites. Maybe it's similar to Mermaid Offshore, which is no longer on the ASX. And the numbers were okay, I suppose. Yeah, what can you say? Okay, that's all I'm going to say. But it's a recent listing on the ASX, and I thought, why not give this company a little bit of publicity right now, even though I'm not sure how many people are going to be watching this, so maybe not that much publicity at all. Anyway, that's all I've got for today's video. Actually, no, this video is going a little bit longer than I thought. I'm just going to talk about this comment. This is from George VV50K. I agree. These daily rundowns I have a glance at and see if any stock I own I mentioned, but those in-depth videos were great for finding new companies I might have otherwise never considered. And Daymetric says +1. What are your thoughts? Do you want me to do more of these standalone videos? I can actually explain why I do less of these standalone videos than these ASX daily rundown videos. It all comes back to efficiency. A lot of some of these or many of these standalone videos don't get many views, maybe 100 views, 200 views. And I do spend a fair bit of time on them. So for me to be more efficient, I get more out, personally, I get more out of these ASX daily rundown videos. More views. I don't spend any time preparing for these videos, sort of more of a train of thought thing. But these standalone videos, I do spend a fair bit of time and I just don't get the views to justify the amount of time I spent. But if I get enough people out there saying, I want more of these standalone videos, I actually will do standalone videos again, but I don't think I will spend as much preparation in those videos. Maybe it will be more like these videos where I do a bit of time just looking at this one video, one company more in depth. So I'd love to hear your opinion. So leave your thoughts in the comments section of this video. And I'll also maybe talk about this particular comment again in another video. Maybe my answers a daily video that will release on a Saturday, if I remember. Again, if I remember. Oh, actually, sorry, Big Boy Baby was the first one to mention this. I missed your individual company videos. Was it good to learn in more detail about specific businesses? So a couple of comments here. So I'd love to hear your opinion, more opinions about this. Okay, so that's all I got for this particular video. Probably my longest ASX Daily Rundown video I've done. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.